Thank you, everybody, for joining us this morning for a session of the Global CIO Symposium. This is a series of webinars and talks focused on the issue of paradigm shift, global investments in a restructuring world. This morning, we are very honored to have Mr. Akira Sugano, the President and CEO of Asset Management One, joining us. Asset Management One is one of the largest asset management companies in Asia and Japan. Mr. Sugano has a very long and illustrious career with Japanese financial organizations. Previously, he also was a senior executive at the Mizuho Financial Group. He's also the deputy president and executive officer at Japan Investment and Trust Association. This series of webinars are co-hosted by VS Partners and FT Chinese / Financial Times. My name is Wang Feng. I'm the editor-in-chief of Financial Times Chinese. Thank you, everybody, for joining us. Mr. Sugano, good morning.
Good morning.
So we'll just start our questions. Today, I will be having this dialogue with you. When people talk about the Japanese market, especially Chinese investors and some Western investors, they have this notion that Japan suffered from a lost decade or actually several lost decades. And currently, the Japanese economy is also heavily indebted, troubled by a deeply aging population, and some very unconventional monetary policy. So there seem to be a lot of pessimistic feelings about where the Japanese market are. But if we look at the data and the numbers, the Japanese market actually performed quite solidly in the last year, especially during the pandemic, during all this disruption to the global supply chain. Certain factors, including the machinery space, precision manufacturing, actually did quite well. So I wonder, from your point of view, could you share with us some observations about where the Japanese market are, and from the sectors that you invest in, what opportunities the Japanese market presents currently to global investors?
Okay, thank you very much, Mr. Wang. First of all, the market recovery of Japanese equities last year during the past 12 months is the reason for that recovery or improvement is kind of tentatively coming from the high liquidity in the Japanese financial market. So under that surface of tentative recovery, I think there is a profound transformation of Japanese corporate society has been going on. I'd like to mention several of those factors. The first factor is the improving corporate governance, kind of aligning corporate governance with kind of Western style corporate governance. As you know, or maybe mainland Chinese investors don't know, Japanese companies kind of struggling to unwind cross-holdings among Japanese institutions, financial institutions and corporate institutions. Because of the cross-holding is based on not only the performance perspective, but on the kind of business building perspective. So it means that from the pure investor point of view, the cross-holding reduces the performance or ROE of the company. So that was the situation, say, 10 years ago, 20 years ago. But since 2015, I should say 2015 means 6 years ago, the Abe administration introduced corporate governance restructuring. The first thing he did was to introduce corporate governance code to Japanese corporations, which induces more active involvement between corporate executive suite and investors, including, say, activist investors.
Mm-hmm.
Before that, activist investors like they called Hagetaka. They are kind of hated by Japanese corporate executives, but because of the change in the corporate governance, the acceptance of investors, which include activists, has contributed to improving the Japanese company's ROE, which is now stand at over 8%, which is still lower than US or Western average of 10%, 12%. But before that transformation, that figure stood at around 3 to 4%, which was quite low compared to the global standard. So I think there is, for the past 6 years, there has been a tremendous transformation in the Japanese corporate governance structure. And looking forward, I think there is more reform to come. One is the reform of Tokyo Stock Exchange, which is, we have the first section of Tokyo Stock Exchange, which has more than 2,200 issues, listed companies on the first section. And we have a second section, and we have two growth market sections. And JPX, Japanese JPX tried to change that, and we are going to have a prime section, mm-hmm. and standard section and growth section. And prime section, in order to be listed in the prime section, you need to have a higher standard of conduct, corporate governance code. For example, you need to disclose your carbon related information in accordance with TCFD, that's Task Force on Climate Change, climate related financial data. So that's kind of a top tier requirement. And also there are several standards which prime listed companies should be obliged to realize. So I think moving forward, I think the corporate governance restructuring or transformation is going to continue. So that's the first thing. And the second thing is M&A. Second factor is M&A. During the old days of cross-holding, we had very stale M&A market. But since the corporate governance code stimulated the Japanese market, we are having more and more M&A activities. So I'd like to point some figures. So in 2020, last year, there were 3,730 transactions in total, with 557 transactions in-out. In-out means Japanese companies acquiring or making equity investment into overseas companies, 557. And 229 out-in. Out-in means overseas companies buying into Japanese companies. So that was last year. So we are having a very active M&A market, and some of them are very big, like a Toshiba case. There are many private equity companies bought into Toshiba. So we are having that kind of very active M&A market, which tend to increase Japanese equities attractiveness in due course. Yeah. And also digital transformation is moving. And as you know, compared to Chinese companies and American companies, Japanese companies dealing with digital transformation has been quite late in coming. But because of the COVID-19 and the Japanese government announcement that they are going to transform the Japanese government and Japanese society into more digital transformation-friendly society, there are many companies moving in that direction. The representative example is Hitachi. Hitachi, when you hear Hitachi, Hitachi is a very old brick and mortar type heavy electricity company, electric appliance company. But now they are moving into IoT, information, Internet of Things businesses, and they have been quite successful. Compared to Toshiba, Toshiba have been struggling quite badly. And Hitachi has been increasing their profit based on their focus on the IoT, which they call it the Lumada. So I think digital transformation, just because Japanese companies has been late in applying that digital transformation to their businesses, there is a big space for them to grow in that area.
Thank you very much, Sugano-san. I'm glad you mentioned responsible investment and corporate governance, because a big topic, key topic of our discussion today focuses on the ESG aspects of your investment, which is also a area that our co-hosts today, VS Partners, they are pioneering in China. So I have some questions on that. When it comes to ESG, we understand AM1 is one of the pioneers in this area in Japan. And through your cooperation with financial organizations throughout the world, you're also a pioneer in this area in Asia. So in terms of your ESG strategies, I wonder if there's anything unique from your perspective as an Asian and Japanese leader in this area. Anything unique about your investment strategies in terms of asset classes, in terms of the way you work with companies, in terms of different compliance structure and the different rules in markets? I wonder if there's something you could tell us about your unique strategies in terms of ESG.
Thank you. I appreciate your question. Yes. As you know, in terms of, with regard to ESG investment, European asset managers have been kind of advancing quite rapidly. And US asset managers and the Trump administration kind of hesitated to move ahead because of the instruction, directives coming from the Department of Labor, which seems to be prohibiting considering ESG over gaining performance. And in Japan, it's in between European and US. But we have been, compared to European counterparties, we have been late. But the situation has been changing quite rapidly. With regard to ESG investment, European asset managers have ESG integrated or ESG related asset under management of over 12 trillion US dollar last year. And the US almost same, 12 billion. And in Japan, we have 2,800 billion US dollar. So it's almost 1/4 of European or US ESG investment. But the growth rate is quite high. The growth rate between 2014 and 2020 for Japanese ESG investment is over 100%, while in Europe it's 1% for the same period, and the US it's almost 16%. I remember that figure. So the level of increase is quite high. And many Japanese asset management companies, including us, has jumped into this growth area. But when I look around, there are many asset managers which has a kind of superficial approach toward ESG. They buy outside ratings from rating agencies and use that rating in order to have active ESG integrated, so-called ESG integrated fund. But as you know, rating at this time, rating across rating agencies quite varied. The correlations among those rating agencies is very low. So it means that you cannot rely on that outside ratings. So we, rather than taking that rating seriously, we set up a proprietary approach within the company. We formulated materiality map. Some of you have heard about the materiality map. We have two axes. Our materiality map has two axes. One is the vertical is society materiality, which means the significant issues for the global environment and society, like climate change, biodiversity, and so on. And on the horizontal line, we have a financial materiality. So we have two axes, and top right hand, in terms of social, in terms of financial, the most important materiality, which is, of course, climate change right now.
Right.
Yeah, and around that, biodiversity, inequality, and water, food, and so on. Those materialities are coming. So we draw up that materiality based on proprietary analysis and extensive engagement with outside NGOs, and we draw up that. So we are using that materiality map to have a priority among those materialities to have actively ESG integrated fund, as well as engagement in the passive mandate. So that materiality map is kind of a compass of our ESG involvement. So I think that's quite different from other Japanese or Asian asset managers. Some quite advanced European asset managers like Robeco and Amundi, BNP Paribas Asset Management are using the same kind of approach. But I haven't heard other US are using kind of single materiality, that's a kind of financial materiality axis. Right. But double materiality, I think that's quite rare in this APAC region.
Right. One particular aspect of ESG, namely climate change and carbon neutrality, that has become all the rage these days, with different international initiatives going on, more and more organizations and governments signing on to the global initiative. In this area, obviously, some of the biggest economies, Japan, China, EU, and US, they all have their different targets, different goals, and different roadmaps to achieving carbon neutrality. Obviously, there's a lot of discussion going on about coordination, but again, different economies, different governments have their own standards and their own paces. But in terms of ESG investors, this creates a lot of complexity, a lot of different compliance issues for investors. I wonder, from a ESG investor's point of view, how do you navigate this increasingly complex world of different roadmaps, different plans, different paces in achieving carbon neutrality?
Yes, that's a very difficult question. And from a private company point of view, that if we act individually, there is very little we can do. But that's one of the reasons why asset management companies formed a global initiative, which aims to make this world carbon neutral. That was the Net Zero Asset Managers Initiative, which was established last December. And with the participation of 30 globally substantially big asset management companies as a founding member. We are the founding member. We were the founding member of this initiative. So we are one of the 30. And we are the only participant from Asian region. So that's one of the reasons why we were selected as advisory board member, which consists of six of the 30 founding members. And so for the past almost 1 year, we have been acting to support the steering committee of the Net Zero Asset Managers Initiative to form a globally compatible platform for asset managers to create net GHG-free. GHG means greenhouse gas free world. And thanks to the activities of that initiative, now the number of participants into that initiative grew from the initial 30 to now 128 asset managers, which include the world's largest BlackRock, Fidelity, Wellington, and other European companies, which I mentioned in the previous mentioning. And the asset under management, which is aligned to net zero, is now almost 43% of the total global asset under management. So we, as a group, engaging with asset owners having moved a little bit late, a little bit slow, I mean, compared to asset managers. They have only 50 members right now, with a cohort like CalPass in US. And from Japan, there are 4 life insurance companies participating into that, and European asset owners have joined. But in Japan, no pension funds have joined that alliance. So the role of asset managers like us is to engage with asset owners to persuade them to be aligned, to make their asset under management be aligned with net zero. And so we are working with asset owners in the investment chain. And on the other side of the investment chain, we have investee companies. So we engage with those investee companies to make their business net zero in terms of scope 1, 2, 3. So we are working on the both sides of the investment chain. So we have been quite busy recently because of that engagement, and we have beefed up our engagement staffs quite rapidly in just recent years.
I see. I understand you're going to leave in a few days for Glasgow to participate in discussions around COP26. I wonder what kind of messages you're bringing to your counterparts there, any specific proposals, sharing any lessons from your own experience?
Yeah, thank you very much. The only problem with myself going to Glasgow is that when you come back to Japan, you need to be self-quarantined for 10 days. So
yes, indeed.
It's quite a nuisance, so jokes aside. Yes, I'm going to participate in the World Climate Summit, which is kind of a side event of government-sponsored COP26. And there are many asset managers and asset owners gathering for that summit. And we are having many panel discussions, and I'm going to participate in one of them. And I would like to relate with other asset owners, especially European and American asset owners, to get the real thinking of those asset owners. And I would like to convey that to Japanese asset owner who are not participating in COP26 this time. I would like to change the mindset of asset owners. The interesting is that in Europe, asset owners were quite active in promoting net zero, and asset managers were kind of pushed by asset owners to be aligned with net zero. But in Japan, it's quite different. Asset managers have been quite active. Partly because we asset managers, not we, but Asset Management One sees opportunity in transformation to carbon neutral world, because there are many Japanese companies with very strong technologies, good specialized technologies in realizing, contributing to realizing that carbon neutral world, like technologies relating to hydrogen and the technologies related to other materials, which is imperative for making the EV and so on. So I think, but the problem with Japanese companies is they have technology, but they don't have the skill to monetize that skill, that technology. So we'd like to engage with Japanese companies to promote monetizing those technologies. I think some people say carbon neutral is the disclosures data which is related to carbon neutral is non-financial data. But I don't think so. Carbon neutral disclosure data are unrealized financial data. So if you are active fund manager, active fund management company, there is a kind of treasure which you can make profit, because if you are able to find the timing and the impact of that unrealized financial data to become realized financial data, you can have a huge alpha when you make investment into those companies. So I think in the past, active fund management has been pushed aside by passive management because of the decreasing alpha. But because of a new unrealized financial data is coming into the market, I think asset managers like us, which has a large analyst, especially ESG aligned analyst capabilities, have a huge opportunity to create alpha over our investment assets.
You mentioned many Japanese companies developed high technologies in terms of related to carbon neutrality, for example, hydrogen energy technologies. Japan also has some of the best battery technology companies, but they may not have the kind of market depth or the scale to quickly monetize such technologies. We have seen examples of similar technology transfer or technology for market kind of cooperation between Japanese and Chinese companies in terms of chip technology, semiconductor. In the last few years, some examples in the LCD, OLED area. But in terms of batteries, Japan and China still seem to be in a heavily competitive situation. So from your point of view, do you see a similar push from the investor community having Chinese and Japanese companies joining hands to achieve both financial results and ESG results in this area, or is this still largely in a competitive situation between the two countries?
Yeah, in spite of the current kind of political situations between China and the US and China and Japan, I think there is a long-term. Currently, it's quite difficult situation for Japanese companies to dive into all-out joint venture with Chinese company. But on the long term, I think there is a huge chance. And before coming to this company, I was the head of global corporate investment banking for mega bank in Japan, Mizuho Bank and Mizuho Financial Group. And I was quite active in enlarging our Chinese business. So we have a very large presence in China. We means Mizuho has a very large business in China, and which is expanding. And that big business, a good business, hasn't been realized in a short-term period. It's been more than 60 years, 70 years. So doing business with China is a long-term, should be on the long-term horizon consideration. And I think for Japanese companies, especially in the carbon neutral technologies, in order to scale up their technologies in the monetizing, tying up with Chinese companies because of the huge Chinese market and the Chinese government strong will to realize carbon neutral by 2060, I think there is a great chance for Japanese companies over long term to be involved in the partnership with Chinese companies. Yeah, that's my belief.
Then from the Chinese side, what kind of strategy would you encourage Chinese companies to take, or even regulators from the government's point of view? What could they do to help achieve this kind of long-term cooperation?
Yeah, it's like net zero initiative. We need to have a kind of level playing field. So in terms of business activities, including joint ventures and other business activities, we need to have a level playing field. So I think one way to achieve that is having a large trade and industrial partnership like RCEP or TPP, which is going to level out the difference. So I think China government intention to participate into TPP and start negotiating with other members of TPP is a good sign for that reason, because during TPP is going to, RCEP is one great step, but TPP is more, I shouldn't say advanced, but advanced in terms of providing a level playing field. So TPP discussions, I'm quite interested in that, and I hope that that will remove the differences in many areas of doing business in that TPP participants' business field.
Right. Thanks a lot. Another question, given your very rich experience with Chinese investors and the Chinese market, of course, you have seen there's been a lot of very strong interest in China these days in terms of ESG investment, especially carbon neutrality related investment strategies. Many of your investors, your clients in China are public sector or sovereign investors, and some of the biggest Chinese companies, both state-owned and private. There seems to be a very heated atmosphere in China right now for ESG, but they don't have so many years of experience in this field. And as Chinese companies tend to go, something becomes very hot, all sorts of money, everybody rushing in. There could be a lot of mismanagement, misallocation of resources. What could your experience in the Japanese market help benefit your investors and your partners in China?
Yes, from our experience in Japan, the first thing you need is reliable data disclosure. You need to first start with that. So Chinese companies need to disclose reliable data with regard to ESG, starting from carbon neutrality, of course, because it's most important, and then biodiversity and so on. So based on that data, we can analyze the company if they can adjust to a changing world. And if we are right, we can produce alpha based on that. So you need to show your investors the kind of sequence of things happening. So reliable data and extensive analysis, which leads to alpha. So we have been doing that in Japan. And in China, I think disclosure is moving ahead, I think. And if more broad-based reliable disclosure has been made, I think the other parts of the sequence is quite easy and would be accelerated in the future.
Mm-hmm. So in terms of data standards, in terms of transparency, in China, these improvements usually come from the regulators, from the government. Do you see similar campaigns, similar initiatives being undertaken by the government to especially improve transparency and data reporting standards in this field?
Japanese government, especially Financial Service Agency, has been quite propelling force behind Corporate Governance Code and the Stewardship Code. So I think Chinese regulators should introduce that regulation, Corporate Governance Code, which depicts disclosure requirement for companies, Chinese companies, and at the same time, Stewardship Code, which governs the asset owners and asset managers' attitude toward the corporate investment. So I think on the side of the regulators, there are many things which can promote ESG investment.
Right. And while you're searching for such opportunities in China, do you see any particular sectors or any particular industries that are the most promising at this moment, or maybe in 5 years' time, things that haven't quite shown results but have promising projections for the future?
Right now, not real estate. You need to be careful about
Indeed,
that.
right.
Yeah. But in many manufacturing, especially having a very good technology with the, not technology, but some technology plus manufacturing capabilities, plus a huge Chinese market, they are having a very good potential, like solar panel, solar powered plant
Yes.
related ones, and yes, and other. Yeah, there are many, especially technology-related companies. They are quite attractive in terms of expandability into Asian regions beyond Chinese market. So I think they are the areas which, from the Japanese investors' point of view, are attractive.
Mm-hmm. Well, some of the most fastest growing Chinese tech sectors and industries also happen to be affected by the geopolitical situation with the US right now. A lot of the top companies are under sanctions or trade restrictions, including what you just mentioned, the solar panel manufacturers. There seems to be some of the latest targets. Do you think such geopolitical difficulties are going in the long term to be a serious factor, or do you see the situation improve for the Chinese sectors?
We need to think long term, and in the long term, I think China and US will find a point where they can agree, even though they are quite different in terms of political system. But I think in order to, there are two big parties in the global society, and in terms of carbon neutrality issues, I think there is a huge potential for them to cooperate, and China has huge potential in promoting that area, and US cannot ignore that. And I think technology could be a key factor to promote carbon neutral, because of kind of controlling all the electricity flows, and in terms of demand supply. And I can mention many, but technology plus kind of basic industrial technologies. China have that.
Great. Thank you very much for your time and your expert opinions, Sugano-san. I think we have almost used up our 1 hour. On behalf of our co-host and the FT, we would like to thank you for your time and wish you a safe and fruitful trip to Glasgow.
Thank you very much. And I hope that my today's discussion is helpful for those who have participated in this session. Thank you very much.
Great. Thank you so much.